Most people don't have $1,000 in the bank.
America's uber-rich pay next to no federal income taxes.
We're going to cut taxes for the people of this country.
The wealthy don't pay their fair share in taxes, right? It's the poor that pay the taxes.
We've all heard the phrase, tax the rich. It's catchy, it's fair. Some might even argue it's moral. But here's the uncomfortable truth. We don't. In most countries, especially those with advanced economies, the people who carry the greatest tax burden aren't the ultra wealthy. It's the working class, the middle class, and yes, the poor. Why? Because it's easier. And in economic policy, easier almost always wins. When people say the rich don't pay taxes, they're half right. Let's start with the data. According to the OECD, most government revenue in developed nations doesn't come from taxing corporations or the ultra-rich. It comes from labor income and consumption taxes. That's income tax, national insurance, VAT, fuel duty, council tax, and all the everyday taxes that people often, unfortunately, don't realize they're paying. Take the UK. The top 1% does contribute roughly 30% of income tax. But when you zoom out, there's VAT, for example, which hits everyone equally, contributing over $150 billion annually. And it disproportionately affects lower income households more because they spend a greater share of their income on consumption. So yes, while rich people may pay more in absolute terms, poor people pay more of what they have. And that's where you'll see a really interesting pattern start to emerge. Poor and middle income households pay a higher percentage of their income towards these indirect taxes because they consume more of what they earn. The rich, they save and invest more, which is taxed far less. Here in the UK, our tax system looks progressive, but here's why it's actually not. On paper, yes, tax systems are progressive. The higher you earn, the greater the rate of tax you pay. But that's only true for direct taxation, like income tax. Once you factor in all the indirect taxes we spoke about, the system often leans towards becoming regressive. A study by the IFS, the Institute for Fiscal Studies, found that after accounting for VAT, excise duties, and council tax, the effective tax rate on the poorest 10% of households was higher than that of some in the top 10%. Now, why is that? Well, because the poor don't save or invest, they consume. And it's important to know that's not necessarily a mentality problem. It's purely an economic one. The system quietly leans on consumption taxes. And guess who consumes most of what they earn? Poor people with less disposable income. And governments love taxing consumption because it's predictable, visible, and hard to avoid. Why don't we just tax the rich more? It's a bit more complicated than that, and here's why. In theory, it's simple. The rich have more money, more income, so tax them more. But putting that mindset into practice is an absolute minefield, and here's why. Point number one, mobility and capital of people. Wealthy individuals can just leave. Over 80,000 millionaires relocated in 2022 alone to countries like the Middle East, Portugal, and Singapore. The UK alone lost over 10,000 millionaires in 2024. And if we look at the data, that's a huge jump from previous years. When the UK announced the end of its non-dom regime in 2024, private banks and wealth managers did warn of a potential exodus of wealthy clientele. Essentially, tax them too hard, and they're simply going to move their money and themselves elsewhere. It's kind of a catch-22, and mobility is a huge part of being rich. It's freedom. And if and when a wealthy individual or a wealthy corporation starts to feel uncomfortable with the pressure they're feeling in terms of tax or in terms of their finances, what's stopping them from all out just leaving and visiting the UK as and when they feel like? And that's a really important point to consider. Ultra wealthy people, when they leave, they don't just take their money with them, they take their ideas, their infrastructure, their plants and sites, they take their jobs with them, and a whole host of other things. I've personally had clients of mine ask about mapping out the ramifications of moving their money from UK-centric businesses elsewhere, exactly because of these reasons. And I've consulted on cases where clients have flat out told us they'll be moving this operation and re-registering it in Dubai or the UAE, for example. Now, you might say in that case, impose an exit tax. Now, don't get me wrong. There are countries that have an exit tax in place, framed as an extension of capital gains tax, but if that was to be put into practice, it should only be a nominal amount. And on those for whom that nominal amount would be exactly that, nominal. And point number two, global tax competition. And point number two, why you can't just tax the rich more and why they'll just leave is global tax competition. Companies compete against each other to attract capital, not to repel it. So they offer lower corporate tax rates, tax breaks for high earners, and flexible residency rules and regulations. Raise taxes too high for those ultra wealthy people and you risk losing that capital. That's why corporations like Amazon, Apple, and Google have their European headquarters in Ireland. Ireland has a 12.5% corporate tax rate. So their European headquarters are in Ireland whilst they're making billions and billions elsewhere. Now here's how the rich legally avoid paying a lot of tax and why it works. Now let's be clear. Most rich people aren't actively breaking the law. They're actually using the law to their advantage. And here's how. Offshore accounts and tax havens. Now by setting up trusts or shell companies in countries with little to no income tax, for example, like the Cayman Islands or Bermuda, the wealthy can legally reduce their tax exposure. That's why if you go on Companies House, for example, and run a search, there are companies which are listed on the London Stock Exchange but were incorporated and are registered in Bermuda, the British Virgin Islands, Jersey, Guernsey, the Cayman Islands, etc. Capital gains versus income. Point number 2, capital gains versus income. Rich people tend not to earn income, they earn capital gains, which are usually taxed at lower rates than the income from work. In the UK, income tax can go up to 45%, but capital gains, just until recently was 20%, now it's been increased to 24% as of April 2025. Point number 3, using debt as a tool. Wealthy individuals can borrow against their assets like stocks or property and live off those loans. Now the structuring for this has to be very, very particular and meticulous, but loans aren't income. So no income equals no income tax. That's how billionaires like Elon Musk and Jeff Bezos pay very, very little in personal tax, despite being worth hundreds and hundreds of billions. Point number 4, trusts and inheritance loopholes. If you have a good financial planner, through trust structures, intergenerational wealth can be passed down while minimizing inheritance tax. It's complicated, incredibly expensive, which is exactly why rich people can afford to do it. Now let's get to the fun part. Why poor people are easier to tax. Point number 1, why poor people are easier to tax, is they often have no accountants. Low-income workers fill out a basic tax return form, if at all. There's no tax optimization, no deductions, no offshore strategies. It's PAYE, pay, automatic, inescapable, and immediate. Point number 2, why it's easier to tax poor people is they have no mobility. The government increases VAT or fuel duty. You can't just hop on a private jet and move to Dubai. Poor people are often rooted by their job, their rent, their passport, and politicians know that and quite frankly take advantage of that. Point number 3, why poor people are easier to tax is they have no political influence. While it may seem as though you live in a democracy where every vote has the same weight, who do you think funds campaigns for politicians? It's rich people. Poor people can do their level best to vote, but that's only once every few years. Lobbyists speak to politicians every single day. So you take a guess. Which voice do you think gets heard? Or point number 4, why poor people are easier to tax is they have no savings. Low-income households have to spend most of their income just to get by. That means every increase in fuel price, electricity bills, or VAT hits immediately. Taxing the poor is frictionless. There's no exit route, no PR backlash, no Cayman Islands option. Now, in many campaigns, you may have heard politicians say they'll introduce policies where they'll introduce a wealth tax. We're going to tax the highest earners more. But why is it that they never seem to follow through? Why don't politicians ever follow through on taxing the rich? Well, again, let's go through 3 reasons. One of them being capital flight. A politician who wants to tax the rich is going to run into so many problems. Wealthy individuals and corporations are going to threaten to move their operations, their money, their investments, their entire headquarters elsewhere. That could end up hurting investment, employment, GDP, and governments are generally terrified of spooking the markets unless they cause voluntary volatility, which is a completely different ballgame. So they back down. Point number 2, lobbying and donor pressure, like we already covered. In the United States, over $3.5 billion was spent on lobbying in 2023 alone. That was midterms, wasn't it? That wasn't even election year. Tax reform, you can bet there's someone arguing against tax reform at a country club in Washington DC. In the UK, high net worth donors often fund party campaigns. So from a politician's point of view, you raise taxes too much, that funding dries up. So why bite the hand that feeds you? The rich can just adopt complex implementation, which means that taxing the wealthy is legally and administratively complex, or actually in most cases, damn near impossible. How do you value private assets? How do you tax unrealized gains? Or do you at all? Unrealized gain is profit on an investment that has increased in value but hasn't yet been realized. That gain hasn't yet been realized through sale. For example, you invest $100 into the S&P, a year later it's worth $110. That $10 gain is profit for you, the investor, but it's unrealized gain since you haven't yet sold your shares. So it's easier for policymakers to keep things as they are. That keeps the money flowing in and the markets remain steady, and slap on a 2% increase in fuel duty. That's ultimately the uncomfortable truth about tax systems worldwide, especially in advanced economies. So when I say tax the poor, I'm not making a moral argument. I'm describing a system that's evolved to prioritize efficiency over equity. The poor are easier to tax because they can't leave, they don't and can't hide money, and they don't influence tax policy. Now, I'm not here to debate whether taxes should be higher or lower. I hate taxes. I hate having to pay taxes. I also hate certain things the government does with my taxes. But the fact remains, when you reach a certain level of wealth and power, you also gain a certain level of freedom to be able to do what you want with that wealth and power. And your money goes much, much further. I'm interested to know your thoughts. Let me know down in the comments below your thoughts. Whether you think the whole system is corrupt, whether you think I'm right or wrong. I'd be interested to know your thoughts. That's all for this video. Thanks for watching, and I will see you guys in the next one.